Systematic additions. Now think about this for a minute. When you were working, you were likely adding into your 401k, your 403b, or IRA accounts on an ongoing basis. Isn't that how you accumulated a lot of your wealth? You might need additional growth to improve your financial situation for the latter part of your retirement. So if you have some residual income, consider at least taking a small systematic amount and adding that automatically from your bank account to your investment account. A lot of times people have dividend paying stocks inside of their portfolio, but those stocks are not set up to reinvest. Instead, they're just paying out to cash inside of the account. But you lose one of the most important elements of growth in the financial planning process, and that's going to be compounding. As Warren Buffett said, it's the eighth wonder of the world, compounding. Number 2, review your cost basis. What does that mean? Well, on your non-retirement account statements, on your brokerage statements, you will have columns that specify items pertaining to each of the investments that you own. One thing that is often overlooked is the cost basis associated with each individual holding. If you have any cost basis that is not accounted for, it may say not available or not applicable, or just NA or none provided, not provided, any version of those items. A very good housekeeping issue for you is to make certain that those items are tended to this year. That will allow you two things. First of all, it'll allow you to be able to make better tax decisions over the course of the year to determine whether you buy or sell additional shares and potentially capitalize on some tax loss harvesting over the course of the year. Second is, it'll allow you to have the appropriate information that you need when you go to actually prepare your tax return next year. It's when you don't have the cost basis associated with an item that's been sold that can create a lot of havoc and cost you additional money with your tax and potentially your financial advisor. Believe it or not, most people never look at their tax return from the previous year. It's a good time to start dusting off that tax return, review it with the tax advisor or your financial advisor, and start thinking about elements that you paid taxes on last year. Start of the year is a good opportunity to revisit how much taxes you paid last year and how you might be able to reduce those taxes even better for the year ahead. That might sound like an odd phrase. What does that mean? Well, you might have paid off everything that you have debts on, including your mortgage. And if you did, congratulations. What a wonderful way to have confidence and peace of mind going forward, knowing that your home is paid for. But most people overlook the fact that their retirement accounts are not paid in full. In fact, I'd argue that you have a partnership with Uncle Sam, and most people don't factor that debt into consideration because every dollar you take out of your retirement account will be subject to income tax, and income tax at unknown rates, especially if you take them out in the future. Bottom line, if you're responsible with your finances, as you likely have been if you have all the rest of your debt paid, it's important to at least have an understanding of how much tax you owe on your retirement assets. Simply consider using a 40% estimate. Not that you would pull all the money out all at one time, but when you factor in a reasonable federal and state tax, it's not uncommon that you might not be in the 30-40% tax rate combined. If you don't have the time, knowledge, or desire to do these things on your own, and start thinking about the costly mistakes and opportunities that come from not looking at what you don't know, because obviously we don't know what we don't know. Consider the start of the year as a nice opportunity to talk to the people that you know, find out if they're happy with the tax advisors, the financial planners, the investment advisors that they're utilizing, and start interviewing and doing due diligence to determine who might be a good fit for you so that you can continue doing all the things that you'd rather be doing and live an even better life.